Hello guys, welcome to yet another video. It's Gwyn Michaels. Today we'll be doing some back testing and I'm going to try as much as possible to be fast with it, and I want to share with you some of the mistakes some traders make when making analysis or when looking at the market in view. So these mistakes ranges from those that are trading the SMC, Smart Money Concept, ICT students, Wave students, Wychoff students, etc. So whatever strategy you're using, the whole idea of trading is being able to look at the market, read it, understand what the market is doing, and also see the market in a composite man angle. Okay. All right. So here I'm going to do some back testing for you guys, and we're going to look at structures. Okay, basically structures. What you might want to be doing, sometimes when you look at trading, okay, you look at in the current day or in the current time frame. Okay, you want to be doing a certain thing. Okay, and you want to also relate it to previous event. Okay. First, before I start, let me share with you a brief on some of Wychoff's logic and some of the quotes. All the fluctuations in the market and in all various stocks should be studied as if they were the result of one man's operation. Let's call him the composite man, who in theory sits behind the scene and manipulates the stocks to your disadvantage. You do not understand the game as he plays it, and to your great profit if you do understand it. All right, so this is a line by Wychoff, and I love that line so very much because it explains what the large players are doing, or the man behind some of the crazy moves in the market. Okay, and I know sometimes as traders we could see a pattern. Okay, could see a pattern. Let's assume we are seeing a pattern like this. Okay, and you suddenly start to draw a triangle. Okay, with this pattern, and suddenly price does this, spikes up, spikes down. Okay, sometimes you think the market is random. Okay, sometimes it could be random. Okay, but think of this as a large player. Okay, if you have lots of volume, okay, you want to sell, okay, you definitely will be looking for buyers. Okay, and if you're looking for a lot of volume, you want to buy, you would be looking for sellers. Okay, so what do I mean now? Let's take example of some of the Wychoff's concept briefly. Okay, so for those of you that actually are not practicing the Wychoff, okay, the Wychoff talks about accumulation, markup, and distribution. Okay, so this is also the Wychoff's logic. He talks about this in his logic, and so many times we see price forming like this. Okay, and sometimes we do not know, okay, what to do when price goes like this. Okay, sometimes it goes sideways, sometimes it looks like we're all having a bunch of random things, okay, happening. And what happens with the composite man here is he looks for opportunity to take you out of the market. Okay, he looks for opportunity to take you out of the trade. Okay, sorry about that. And maybe, just maybe, you're looking at support here, you're looking at resistance here. Okay, sometimes you can see as traders that price come close to resistance but don't get to touch it. Okay, sometimes comes close to support but don't get to touch it. Okay, but price could be trading maybe in a sort of range. Sometimes market could create stop hunt, and according to the Wychoff theory, if it's an accumulation, we might call it a spring. Other words, some other set of traders call it stop hunt, and so many others have different names for this drop down here. All right, so these oftentimes trick the smaller traders. Okay, now let me set an example for you. Let me say a typical example. Say you have price trading maybe downward, okay, and then form some sort of pattern, okay, like this, okay, and maybe you draw this as your support, okay, you draw this as your possible resistance area, okay. What happens if price spikes through this area just a little bit? Okay, for traders that will be looking for at the breakout and retest, some may look to hop on this position. All right, putting the stop loss as wide as maybe previous lows and targeting maybe the whole range from the top. So if this range, let's say, is 100 pips, some traders could target 100 pips upside. Okay, they could do so. Okay, but the original move here was to the downside. Okay, price does that and continue downside. Okay, this is the composite man in action. Okay, here price is believed to be moving downward, and then price reaccumulates. Okay, so the composite man here puts this up as an upthrust. In this upthrust, sometimes we could have an upthrust. Okay, it's maybe after the next high. Okay, we might have maybe the upthrust could be here or could be here. Okay, we do not know. Okay, so we want to be reading price action, market action, okay, the way it is. Okay, it's all about understanding what price is doing over a certain period, over a certain structure, okay, or over a certain area or environment, okay, and react to it. Okay, plan your trade your plan. That's the best thing to do. Okay, in my last video, I try as much as possible to share some lights as to some of these things. So you can expect that this will happen in the market. Okay, sometimes it happens, sometimes it doesn't. Okay, sometimes price play out as we want to play. Okay, so let's look at some back testing here. All right, so looking at this one here. Okay, so if you are a trader, all right, and be it you're trading the SMC, smart money concept, okay, so this would be your most likely order block. Okay, all right, so this would be your next likely order block. Okay, I know some persons look at some sort of maybe mitigation or mitigate level. Okay, so these could be your levels. Okay, and this is back testing we're doing. Okay, and just let's assume maybe, just maybe, okay, we do not have this whole area yet. Okay, we do not have this whole area yet. Okay, let's assume this whole area here is not being manifested yet. Okay, so I will just try as much as possible to put up a dark line and then put this up on top. Right, so okay, let's assume this whole area is not here, it's not valid yet. Okay, and maybe you have price dropping down. Okay, I want to share with you something very unique here, guys, and I hope it will really teach you a lot of things. Okay, let's assume we have price rolling down. Okay, as traders looking at a downtrend, okay, in my last video I shared with you support, resistance, how you can identify them and how you can trade them. Okay, and you know that in downward channel your major point of concentration should be at the resistance. Okay, since price is making lower lows and lower highs, then lower lows, so your major concentrations should be at the resistance area. That's where you want to be looking to sell. Okay, you don't want to be looking to buy. Okay, you want to be looking only to sell. Okay, sometimes we could have expansion, then a continuation, okay, or a correction just out of that zone, okay, or out of that channel downside, okay, sometimes it could happen, okay, and you want to okay, pick out what is happening, okay. So here in this example here, I'll show you some of the things you can do when price starts to expand or move away from the channel, okay. In areas like this, when price starts making new highs, okay, and let's say price is making new high just quite different from what it ought to be or your initial trade plan, like this one, okay, and it's starting to shy away from the channel here, okay, like this one. Remember, we are on the daily time frame, okay, and price starts to shy away from this point. If you are a smart money concept trader, you will be looking for or at these other blocks, okay. You'll be looking at this other block, maybe some structures or something to back up your assessment, okay. And in this time, just maybe you were looking at selling, okay, maybe here, maybe around this point, you're looking at selling, and you could put up a small risk, maybe up here, and your target would be the next low in expectation. And then price does this, okay, drops one more time. That is the best time to look at price change, okay. Start to have pictures in your mind that there could be a change in formation, that price may either start making a sideways movement or may start a new phase of market formation, okay. And with this, okay, so I know some of you would be looking at points you want to start looking for sales, okay. You want to start looking for sales. Okay, so in this kind of channel here, okay, this happens a lot, okay. Let me give you as a tip. Price don't just form a channel of support and resistance more than 5 times on a clean touch, okay. Let me explain that again. Price do not form support resistance more than 5 times in clean touches, okay. After the first phase of wave, market tends to expand, okay. What the composite man does, it tends to want to trick traders, okay. So whenever you see price goes one correction, another one correction, and another one correction, expect that next push here the composite man might just provide you with some tweak, might just start to shake off some weak holders, okay. For those persons that actually came late into the market, the composite man would want to shake them off, okay, in that way creating some sort of different formation, okay, different pattern, such that they could actually make a mistake, okay. So what are the mistakes they could possibly make? They could look to continue selling, and whilst the retail traders are looking to sell, they're selling into buying orders, okay. And also one of the rules here, or the Wychoff rule, tells us that the market and individual securities never behave in the same way twice, rather tends to unfold through a broad array of similar price patterns that show infinite variation in size, details, and extension, with each incarnation changing just enough from poor vision to surprise and confuse market participants, okay. So these words here from Wychoff are very important, okay. I look at that many times, and if you do some back testing, okay, if I do some back testing for you, to make some back testing for you, you would see what I'm talking about. Let me set an example. Here, let's see some back testing. Let's assume here a channel like this one, okay. So by the time you are about to configure your channel, price is also configuring itself to knock you out. For example, This is a live chart. This is one. Okay, here, another one. Touch the next trend line. Another one, price starts to shy away. It could do so before continuing to the downside. So this part of trading is what traders get it wrong. Okay, this part of trading is what traders get it wrong. Some traders want to hang in on a losing position. When this happens, walk away from that trade. Okay, when it happens, walk away from that trade. It can happen in small time frames, it can happen in bigger time frames. Okay, so even as a trader looking to trade this structure to the downside, you can expect that this could also happen as well. Okay, price shies away. Okay, it shies away from that structure. This is to trap retail traders or latecomers from who want to participate late in this kind of information, thinking that they have a unique pattern which price is actually following. So what the Wychoff teaches us is price don't behave the same way multiple times. Okay, it doesn't behave the same way multiple times. When I mean multiple times, in its overall behavior, that is different from chart patterns. Those are different from zigzag, flats. So if you're looking to trade a zigzag, you can expect that some zigzags could form up to 127 extension. Okay, some zigzags may end just higher than 127 extension. Some flat patterns could form like this. Some could form maybe like this. Some could form maybe like this. So in all, those formations, those price patterns remains valid, but do not behave the same way over and over again. There could be some differences, okay, some variations, okay, over time. Okay, so you want to understand this. So price action, you want to understand this. Okay, let me just switch to some little light on this one here. Okay, this one is going to be very important for you. Okay, I know some persons are being thought that when you have a downtrend, market is moving down. Okay, so the point where you want to be laying emphasis on is the structure, where market tends to react. Okay, no, stop that. If you're doing that every time, stop that. This I'm going to explain in my next video what really happens here and the traps around this environment. The true meaning of this formation, for example, the true meaning I'll explain in my next video, so stay tuned to the channel. And if you're new, turn on the notification bell so you'll be getting all the information whenever a new video is being posted. Okay, another example is here. Okay, traders tends to be more observant and also tend to react more around this point. Sometimes it will work, sometimes it will not work, but many times than not it doesn't work. They are not true structural areas. Okay, if this works, maybe, just maybe, it's a coincidence, okay, that price tends to react around there. Okay, there could be some other thing causing price to react around there, not just this formation. So if you're looking at this formation alone, you're going to get it wrong. For example, we had this formation here that failed, price continued the upside. We had maybe another one here. Okay, just maybe another one here. Price continued upside after the break, but you can see that price reacted around this point here. So consistently doing this would get you confused. Okay, will lead you into paralysis analysis. Okay, you don't want to do this consistently. Okay, so we'll do some more back testing and I'll show you some of the tricks of the composite man in my next video. See you next time. Subscribe, like this video, share with friends. That will be the best. Thank you, and I hope this adds to your trading. I love you guys.